Hello traders. Welcome to today's Pairs of the Day update. Let's delve into the latest movements and key factors influencing the euro, US dollar, USD, and Canadian dollar, CAD. The European Central Bank's Vice President, Luis de Guindos, has hinted at a potential interest rate cut this September. This move would be influenced by the ECB's new projections, which will play a crucial role in determining if inflation is aligning with their targets. As the Eurozone watches closely, this speculation has introduced a new dynamic into the financial markets. The euro against the US dollar has continued its downward trend, falling to multi-day lows around 1.0840. Despite modest gains at the start of the week, the currency pair has succumbed to a dominant risk-off sentiment. This movement underscores the challenges faced by the euro amidst ongoing economic uncertainties. The US dollar has shown modest gains, with the dollar index rising to the mid-104.00s. This uptick comes even as US and German yields have seen a decline. The resilience of the dollar in the face of lower yields highlights the underlying strength of the currency in the current market environment. Market participants are expecting a cut in interest rates by the Federal Reserve in September, with another potential reduction in December. This shift in focus has led to increased attention on upcoming US political developments. The Canadian dollar has managed to secure slight gains across the board, yet it remains somewhat lower against the US dollar, which is experiencing a mild recovery. This mixed performance comes at the beginning of a week that started quietly but is expected to become more active as new economic data emerges. Canada is preparing for another quarter-point rate cut on Wednesday, following the Bank of Canada's commitment to a series of rate reductions in the latter half of 2024. Despite a recent uptick in core inflation metrics, the BOC is focusing on reducing debt financing costs to meet broad market demands, signaling a shift away from a purely data-dependent approach. Now, let's see what technical analysis reveals. Let's look at the charts. Okay, we have opened the 4-hour chart of euro to US dollar. The price is currently moving below the 20-period moving average, with the stochastic indicator moving inside the oversold area, suggesting a potential decline. For support and resistance, we've identified 1.0815 and 1.0761 as support levels, with resistance levels at 1.0892 and 1.0943. If the price continues lower, it may find support near 1.0815 or potentially lower at 1.0761, with a profit potential ranging from 35 to 88 pips. On the upside, any corrective movement might encounter resistance around 1.0892. Now, let's switch to the 4-hour chart of US dollar to Canadian dollar. The price is currently moving above the 20-period moving average, with the stochastic indicator moving higher entering the overbought area, suggesting a potential upward movement. We've identified 1.3749 and 1.3717 as support levels and 1.3806 and 1.3841 as resistance levels. If the price continues to move higher, it could find resistance near 1.3806 or even test higher towards 1.3841, with profit potential ranging from 20 to 55 pips. Conversely, if the price decides to move lower, it could find support at 1.3749 or even test lower. Always remember to consider your risk management before entering any positions. That concludes today's update. See you in the next video.